Thank you. Thank you. Right. So, in this webinar, I'll be covering at least 8 strategies to help each one of you increase your business profits, even in the current economic climate, with all the challenges that we face at the moment as business owners, because it's been tough out there. I think the last few years, no one can argue with that. We've seen wage inflation really kick in, materials inflation as well. Many of our construction and engineering clients have said materials are up somewhere between 30 to 50% post COVID. We've got competitive fee pressures as well. And of course, we have the tax rises that we've seen in successive budgets. So there's no arguing that it's a challenging environment. Um, and I just thought it would be good to understand in the chat box, how are you feeling at the moment? Has this affected your business? Are you feeling optimistic? Are you feeling a little bit less optimistic than in the past? Any thoughts in the chat about this would be really good to gauge what the current feeling is amongst the people we have here this morning. So any thoughts? Love to see that. Even in our own team, actually, we've been having discussions this year about how this is all affecting us and what we can do about it. Because it's very easy to I suppose buy into some of the negativity and the despair that we've certainly seen online recently about how challenging it is to run a business. And today I really want to share how we can move away from that and what you can do at a practical level to help you actually manage your margins and improve them. That's really my focus. And I like sharing this with many entrepreneurs that we support because it's so relatable. They've told us this journey of entrepreneurship is so relatable. The roller coaster of emotions that we go through when we're running a business. And those emotions can be super high, super energized, super excited, and there's times when it's not. There's times when it's not. And we call that sometimes the dark swamp of despair. We fall into that pit of despair where perhaps it's not clear how we're going to move forward. And I think for me, the interesting point about this is what it says there at the bottom, that emotional roller coaster, that journey is inevitable. I've seen that over the life cycle of businesses. I've been in business myself now for 18 and a half years. And we've seen this in so many businesses that at some point there are those dips, those dips financially, those dips emotionally, and it's almost inevitable actually, and perhaps necessary. The mental resilience of that builds in the leader or the leaders. The resilience of that builds is often necessary to navigate this tough journey. It's a tough but ultimately rewarding journey. So I just wanted to share that because I know that if I've got a subsection of 100 business owners, there's going to be a proportion, probably a significant proportion, who are maybe feeling that way right now. So it is a normal emotion to feel. And as I said, today I want to look at how you can move away from that. So I just thought one interesting question is, given what I've said about that emotional roller coaster and some of the challenges we faced and the negativity and the fear that's being spread online as well, how many of you felt this temptation perhaps to look at your fees and feel like you've had to go down that route of discounting in order to win more work? How many of you felt that temptation? Because perhaps that temptation feels necessary for you at the moment. And it's interesting because I remember asking this to a group of I was doing I think it was a CPD workshop or something similar for a group of architects, and this is about 12, 13 years ago. And I asked them, I was in a room with them, and there was about 25 practice owners there, and I asked them, guys, how many of you have felt this need to discount in the last 12 months? And all but one hand went up. All but one of them. And that was a different economic climate then. But the fact is, it's always challenging in business. And the thing we all need to confront here is how can we be better? We can buy into the doom and gloom, or we can confront and say to ourselves, what can we do differently? What can we do better to better manage the situation? So I want to look at the alternatives, and thank you for those who are sharing. Actually, goodness, that's fantastic. Thank you. It is great to understand your perspectives because I want to look at the alternatives. There are alternatives to protect and improve margins, and I don't think there's a quick fix, guys. There's no one magic wand solution to this. I take this concept of marginal gains. This is from James Clear's book on atomic habits. And my goal is to share some strategies. You may take a couple away, and they may start to create some small improvements, which may or may not be noticeable in the short term. But the point here is when these improvements are done consistently over time, and I mean years, not days and months, long term, when they're done consistently, you start to see this aggregation, compounding impact. But it needs to be done consistently over time to see that benefit. And I think that's a common theme for whether I'm doing a session today on margins, whether I've done my sessions in the past on completely different topics. It's completely the same concept here. The consistency is critical to driving the improvements that you all want. So let me start with this concept, your levels of financial mastery and financial understanding. Because, of course, the last budget was just, it was insane. The amount of discussion around the tax changes and all of those things. And of course, we've all studied and looked at those changes. I'm not here to tell you what they are. It's all documented online. But the interesting thing here for me is a lot of people are moaning, for want of a better word, and yet they don't even understand the basics of how their tax is calculated and how they can even manage some of those issues. They don't even understand the score in their business. They don't understand what's really driving profit, what's driving their performance, which indicators they need to look at in order to improve. And I use a sporting analogy deliberately because you can't imagine a professional sports person taking the field of play and not knowing the score. And not only not knowing the score, but not understanding the metrics that are driving their performance. So just knowing the outcome is not enough. Just having a P&L that shows you basically whether you're winning or losing, that's not enough. That is simply not enough to understand what you need to do to better manage your financial performance. It's simply not enough. And let me prove it to you. Let me give you a little anecdote that we see so commonly, because everyone's heard this expression, revenue is vanity. Everyone's heard this. And yet, how many of you are actually focusing on profit and cash flow and actually understand how this is driven in your business? So let me give you a little anecdote, what I call the end of year surprise. The end of year surprise. And I know we've got Paul actually on this webinar, and Paul's an accountant, so I'm sure Paul's had this discussion with many of his clients over the years about this. And you get to the end of the year, let's say your end of year was 31st of December, and your accounts are produced by your accountant, and maybe you've got to February, March, and your accountant says, hey, here's your accounts, and we can see your taxable profit, and therefore your corporation tax bill is 15 grand. And you're sitting there going, 15 grand? Okay, first of all, I wasn't expecting that. There's surprise number one. You didn't actually know what the tax bill was going to be in your business. It's come as a surprise. Secondly, you're then sitting there going, that's more than I thought. how on earth am I going to pay that? I don't have the money to pay that. And I didn't think we were making much money because there isn't much cash in the bank account. Suddenly you're hit with this surprise. And maybe some of you have been there where you didn't understand why you were paying so much tax in the first place in terms of corporation tax. And then the double hit here is it was a surprise how much corporation tax you were paying. Secondly, then you're not able to take the dividend you thought you would be, for those of you who pay yourself in dividends, which of course most business owners do. You're not able to take the dividend you thought you could be because your accountant then says, oh, well, there's only a little bit of taxable profit left after tax. So that limits how much dividend you can take. So you've been hit with a surprise tax bill you weren't expecting, and you've been hit with a reduced dividend that you were hoping was higher. If that sounds like you, ever, then you don't have the level of financial mastery that you need to have, which has the budget has only proven your financial mastery has to improve. Otherwise, you are going to get caught out by this. You're going to get caught out by the changes to dividend taxes and NI and corporation tax bills itself if you don't understand this better. So, here's some questions to ask you to really understand whether you've got a basic level of financial mastery. Number one, do you know your current net profit in your business? Not do you need to look it up, and I'm sure it's on a system somewhere, Parag. Do you actually know that figure right now without looking it up? Your current year-to-date net profit. For most people, as we've asked that question to historically, the answer is no. They don't know it. They're not focusing on that number. They know what their revenue is. They know how much their customer or client income is. They don't know the net profit in their business. Which means they don't actually know how much net profit they're forecasting to make for that financial year. And if you don't know those numbers, you're not going to know what your forecasted tax bill could be. Because if you're on top of this, if you have that level of financial mastery, you will actually know how much tax you're likely to be paying at the end of your tax year. All of this stuff is quite simple to calculate, and especially if you're using accounting software these days and you've all got accountants. You should know what that forecasted tax bill is before your end of year so you can do something about it. If you've got profits in there, you may choose to take pension contributions. Certainly, that's one of my main strategies at the moment. I take my 60 grand pension contribution before the year end. I wasn't doing that 10 years ago when I was in my early 40s. I chose to use the money for other purposes. But now I'm not in my early 40s. I'm now 53. It's one of my goals to make sure I pay myself the proper pension contributions every year, assuming I've got the profit. But I'm doing that before the year end. That 60k contribution then comes off my taxable profits, which then saves me 15k of corporation tax. I can make that decision before my year end, which is, of course, the kind of decisions and tax planning you should all be doing. You should also have the money separately set aside for your tax, for your VAT and your corporation tax. Again, going back to my surprise I mentioned earlier, you should not be sitting there as a business owner going, but I don't have the money. This is all a surprise to me. It should have already been set aside and planned for. And I know some of you are doing that, but we see so many business owners just running their business, working really, really hard, working crazy hours, putting their all into it. They're committed, they're dedicated, but they haven't got a clue about their numbers. And then they're sitting there going, well, the government's screwing us over, the taxes are too high. And yeah, I mean, we can have that debate separately. Yes, the taxes have gone up. But you can manage that, or at least better manage that. And you can also better manage if you've set yourself a remuneration goal, how much salary and dividend do you want? Again, this can all be forward planned. So you know what your taxable profit's likely to be, you know what your corporation tax bill is likely to be, and therefore you can manage that so that you know what's left for you in terms of salary or dividend. And again, it depends on what your goals are. That may or may not be important to you. But by knowing this data and having this level of financial mastery, you can plan for it before the year end. And I actually think, just to give a bit of a contrarian view on what happened in the last two budgets, I think it's the upside of it is it's forced a lot of business owners who've had their head buried in the sand about this stuff. It's forced them to confront this. It's forced them to go, well, but do I really understand what these taxes are and how much I'm paying? Do I understand how this is calculated? For most people, it's like, no. It's forced them to confront this. These are the discussions you should be having with your accountant, of course. This is not a webinar about accountancy. This is just the basics of, do you know how your tax bills are being calculated so you can better manage them? That is something I personally feel you should be pushing your accountant on. But it's not your accountant's job to plan your taxes, really. It's your job as a responsible business owner and leader to be on top of this and understand this. So that's the critical thing I want to flag right up front here, guys. And yeah, thank you for the comments. And um, I also want to flag the fact that when business owners are faced with these challenging times, maybe you're in that pit of despair I mentioned, and it's very easy to default to, well, I'm just going to work harder. I'm going to go and find more clients and customers. That's the solution. I'm going to do more marketing. I'm going to switch on that leads tap. I'm going to go all in on marketing, do more and more. Let's put some money or more time into it. Let's go all in on generating more work. And that generally is constrained by how much money you've got to do that or how much time you've got to do that. That's challenging. That's challenging. There are smarter ways of doing this. And as I said, I'm going to share some overlooked ways of improving your margins without having to go out and just get more work. That may well help the revenue. It may do nothing for your profit margins. So let's talk about value. And this one is absolutely critical. And when we look at the decisions your customers, your clients are making about whether to say yes to you or not, they're making this decision in their minds. Do they see you as a cost? Do they just see the price? Or do they see the value in investing that money with you? Which one is winning in their minds? And if you're constantly getting price objections, it suggests that they do not understand the value sufficiently to pay for your services, or certainly to pay premium for that. And my definition of value, by the way, is why should they pay for you rather than a cheaper price competitor? Why should they pay for you rather than a cheaper price competitor? That is what your value proposition needs to explain. And you need to work hard to define that and then to market it. It should be underpinning all of your marketing, your content, your videos, whatever it is you're doing out there. It needs to underpin that. Because if they don't understand the value, then it comes back to price. And there will always be someone cheaper, of course. So then you're into price wars and discounting and significant erosion of margins. And yet, when you get this right, guys, when you get this right, I mean, let's take the company that have done this better than any other company in history. Apple, of course. And you look at, people queuing. Why do people queue for Apple products. Whenever Apple launches something, people are queuing it. Yes, they're crazy, geeky tech heads. I don't know, you can call them that. But it didn't used to be this way for Apple. It didn't used to be this way. If you study the story of Apple, as many people know now, Apple actually made, at the time, the biggest loss many, many years ago. They made the biggest loss in American corporate history 30 odd years ago or more. They actually made whopping great big loss. That's when Steve Jobs lost his job. They were crashing. They were seen as a commodity. There was no value proposition, and they were losing money, um, ridiculous amounts of money, until they confronted this issue of value. And now people pay a premium for an Apple product versus a cheaper priced equivalent, and they pay a premium for the value that's associated with Apple, which which I define as just that feeling that they've created, that brand, that feeling, that it's cool, it's trendy, you're part of the club. It's not for people like me, it's for trendy people who want to have that feeling. It's got nothing to do with the box and the components. It's got nothing to do with the computer or the phone or the gadgetry behind it. It's got to do with how it looks and how it makes you feel and the status. And that value is worth billions upon billions of pounds over the last however many decades. So it is possible to do this. It's challenging. Yes, I know. It is possible. Just to use a more down to earth example, I was talking to a guy who runs a plumbing firm in Southeast London yesterday, and I was coaching him back 15 years ago, and we did something very simple. We looked at what's the value in a plumbing firm, and the value is not in the plumbing. The value is in the reliability of turning up on time. Certainly, that's what he defined. And so we put his hourly rate up £15 an hour. So he was higher than his competitors, but in return, the value they were getting was that they were able to be much more reliable than the competitors in terms of when they turn up and what time. And people pay a premium, were paying and still do pay a premium for that value. So the value proposition is critical, and allied to that, linked to that, is the fact that we all operate, with a few exceptions, we all operate in highly, highly competitive sectors. And we need to show what our value is compared to the others, and we need to stand out. We need to appear different. And again, this is where your marketing comes in. The challenge most businesses have is they all look the same. And I've done this. I remember years ago, I Googled, I was coaching a couple of web design agencies. So I Googled to see web design agencies in London, the top ones that appeared on page one of Google. And 9 out of 10 of those companies literally were using the same words, the same languaging, word for word on their websites. It was unbelievable. There was little or no differentiation on their website. So if people can't tell what's different about you, what makes you stand out, inevitably you're forcing them to go back to price, because there's no other differentiator. And so again, thinking about how you stand out and what you're marketing that makes you look and appear different from the competition is very powerful. And I call it imagine this is called niching. Looking at how you can niche and be much more specific in terms of who you're targeting, which audience you're targeting. And imagine you were a niche of one. In other words, just go with me on this one, guys. Imagine you were a company that was just focusing, there was the only one that delivered the product or service for your target audience. Imagine you were in a niche of one. And imagine what that would do to a number of variables in that business, a number of performance indicators, like your price. You could charge a premium, Well, you could probably charge whatever you want if you were in a very small niche of suppliers, or in fact the only one. All the leads in that audience would come primarily to you because there wasn't much competition. Your customer acquisition cost, i.e., the cost of marketing and time to acquire a customer, would go much lower because you're differentiated and niched. Your recruitment, you would stand out in a sea of sameness, which means talented people were more likely to look at your business because you look different from all the others. You're more likely, therefore, to attract higher quality recruits. The lifetime value of your customers would go higher because there's a limited number of options to who they buy from in future. So repeat business would be higher. And also for those of you who are interested in potentially exiting via sale or attracting investors, the valuation of your business would go up significantly because venture capitalists look at your profit and they apply a multiple of profit. But when you stand out and you're niched, the multiple go up because you're much more attractive now to a potential buyer because you focused on a niche and capitalized on it. And in fact, I knew a guy. He had a logistics haulage business, and he basically owned a fleet of trucks and had a very specific niche on who he was doing that for. And he became known in that niche. He marketed it, and in fact, he attracted a buyer from Hong Kong who came along, had a look at his business in Essex, and said, "Yeah, you know what? You're focused on that niche. The business model makes sense to us." And they paid an insane premium. In fact, they paid 37 times profit for that business because it was niched. The average business, if it even sells for 2 or 3 times profit in this country. So you can see what that niche did for his boring old haulage business. Another example, actually, this is Shaz. Shaz and we were working together many years ago, and he had a marketing agency. Zillion marketing agencies in London, of course. And what Shaz decided to do was niche down to become a marketing agency just for the dental profession. And he told me at the time, he said it was quite a scary decision because he was choosing not to work with other type of clients, which he was basically having to say no to. And the interesting thing for his business is as he became niched, he became more and more well known in that industry. And in fact, I've been to certain events, he's held events for dentists, and I've gone and met a lot of his clients, and they all said the same thing. They all said we would only work with this business. Me and our contacts would only work with this business because they are the best known agency who are supplying the dental profession. So he became the go-to supplier. Obviously, that was backed up by marketing and reviews, but he became the go-to supplier in that niche. And we helped him create the business that worked more without him. In fact, it worked entirely without him. So when you get this right, it's an option, guys. It's not an option I'm saying you need to do. I think it's an option you should consider about how differentiated you are in your marketplace. Now, when you become differentiated and niched, and you can charge more money, of course. Now, you may think that's not possible in your industry or your profession. So let's look at the other overlooked source of improving your margins. And this is a big one for me, actually. I'm Formula One. When I was younger, I think in my teens, I would watch Formula One racing back in the late 1980s, and the interesting thing was a pit stop when the car comes in to get refueled and tires changed and all that. A pit stop would typically take somewhere between 10 and 20 seconds. And they would time it, obviously, because they wanted to minimize the time that the car was not in the race. Now, that pit stop time, anyone know how long it takes? It's um it's around 2 seconds. It's gone from 10 to 20 seconds to 2 seconds. In fact, you can go on YouTube, guys. In fact, I'm sure I saw a video. I was looking at the videos last night in preparation for today, and I'm sure I saw a video by Ferrari that it was the 1 second pit stop. There's a camera there, and the people are all standing. There's 10, 15 people waiting for the car. The car arrives. You blink your eyes. The car's gone. It almost defies belief how 15 people can do anything together in 2 seconds or less. And you think about the efficiencies that must have evolved over the last 20, 30 years to go from 20 seconds to 2 seconds. It's mind boggling. And I use this analogy because I want you to understand that for most service businesses, or most businesses generally, their biggest overhead is wages. And so, what I'm talking about here is how efficiently are your people working? What is your return on the investment that you are making in people's wages? Because everyone's busy. Everyone in your teams and even you guys will tell us that you're busy. But how productive are you? There's a difference between busy and productive. How productive are you? How productive are your teams? How is that being measured? Is there any measure of productivity, of output? I really hope so. And what have you put in place to improve productivity and output? What is being measured here so you can drive improvements? And when I started my first job, or my first proper job, was actually in an accountancy firm. I was a chartered accountant by profession, and in 1995 I joined PwC, the PricewaterhouseCoopers, the largest financial services company in the world, and they had two, two key productivity measures. Number one, we had to complete a timesheet every week, like many of your teams do. Timesheet every week that recorded how many hours we'd spent on clients, which clients, what was the billable hours, and what were we doing outside of those client hours? What else were we doing? And the first performance indicator was we had to submit the timesheet every single week, Friday close of play. It was a non-negotiable. In other words, it wasn't something they chased us on or moaned about. It was a non-negotiable. If we didn't do that, we didn't keep our jobs. Point one, because it was so important to their business to understand where our time was going. Where was it being used? Was it being used productively? Number two, we had a second performance indicator, which was an average of 75% billable hours per week. Some weeks it would be more. In fact, some weeks it would be a lot more. Some weeks it would be less, but the average needed to be 75. And we were tracked on that. And interestingly, everyone knew that performance indicator and everyone was focused on it. So I would do my timesheet and then I'd ask my mate there, oh, what's your billable hours percentage this week? And then, well, I'm 90, you're only 80, Parag. And it almost became competitive. And if you weren't hitting 75, you'd have to go and talk to your manager and work out how you could get that percentage, that billable percentage up, because it was how we were being measured. And so that performance standard really gave us a focus, which obviously was in the best interest of the firm and their margins. And so my question is, how is this being measured in your business? Is it being measured? Is this something you could do a lot better? Are you and your team busy, but do you really know if they're productive? Because everyone's busy, guys. But look at the Formula One guys. They proved to us how astonishing, what level of astonishing improvements can be achieved when you focus on this. Now, the other thing I want to mention to you, I've got a few last points to cover. I've talked about this actually. A few months ago, I did my marketing mistakes webinar, and so if you need to go back to that, that's on our YouTube channel, the Business Growth Agency, and you can subscribe there and have a look at the old webinar recordings, including the one on marketing. And I talked in that webinar about inconsistent lead generation, what I call lumpy marketing. When you need to generate more leads, the effort and the time and the energy going into lead generation goes up, and then you get busy, and that goes down. It goes up and down. It's inconsistent. The question here is, what does that create in your business? Obviously, it creates an inconsistent lead flow, which leads to inconsistent client flow. And that we know is a big issue for many businesses. It's not the way to consistently grow a business if your lead flow and your marketing is inconsistent. Now, the interesting thing I want to flag here is when your lead flow is down because it hasn't been given the right level of focus, and you suddenly have that moment where you're like, we need more clients, and you get an inquiry, and it's not a great one in terms of maybe the fee or the type of client or the type of work, but you're in that trough down there where you don't have many leads. And so what happens in there? You go, well, we need the work at the moment. We'll take on that client. And you know deep down it's not the right one. In fact, it's the wrong client. And working with the wrong clients or bad clients is incredibly bad for your profit margins. Because how many of you have ever lost money, as in profit? You've made revenue, but you've actually lost profit on a client because it was the wrong client for whatever reasons. It was the wrong client, and they've actually lost you money. We know because we've got clients to measure their project profits, and they're always loss-making clients. And very often it's a symptom of the fact you took them on because you were desperate and you didn't have many leads at the time. That's a marketing issue. And it leads to these decisions to bring on the wrong clients who screw you up financially and in other ways. And so if that sounds like you at any time, go back to that webinar, have a look at it, because it really is such a common challenge. And if you're looking at how you can improve your margins next year, you don't want to be constantly working with the wrong clients. And you don't need to if you've got more consistent lead flow. You can choose. Wouldn't that be wonderful to have the choice of client? The other thing I'd say to you, and again, this is something I covered in much more detail on my sales session, is that your ability to bring on clients at the right fee in the right audience that you're wanting to work with, who are at the right margins, that is a reflection of your sales skills. And for many people, sales is challenging. It can be scary, it can be fearful, especially when you're talking about fees. And so I would go back to how much learning and education are you doing on your sales skills? Because, yeah, again, moaning about margins is not going to move you forward. Improving your sales skills might be something that needs more work for you so that you can bring on clients at better fee levels. And lastly, I'll leave you with another little anecdote, actually, on a completely different strategy. So this is the lady in the middle of that doorway there. That's Denise. Denise co-owns a small tailoring business in Hoxton called Orhan London Tailoring. And one morning, I got a phone call from Denise. This is a good 15 years ago, and I still remember it vividly. And she said, Parag, we're in overdraft at the moment, and the bank are now saying we can't have an overdraft anymore. I don't know what I'm going to do. We don't have the money. We need the overdraft. If the bank take away our overdraft, we're screwed. What shall I do? That was her question, and it was a panicked question because she knew she was gone in 3 or 4 weeks. The business couldn't survive. And so I said to Denise, do one thing and do it well. Go back to your ex clients, your previous customers, the people who bought suits and garments from you in the past. Get on the phone and call them and ask them two things. Would they like another garment, or do they know somebody who would like another garment? Now, that is a stunningly simple strategy, but she'd resisted doing it all year. She'd resisted it. Oh, Parag, they don't, all these excuses, they don't want to hear from us. These are busy people. They don't want us asking them to buy another suits and all these excuses. And now her money was running out. And so she had no choice now. She got on the phone. She called all her customers. She had a long list of customers. She called them all. And I remember this was at the end of November. By the end of December, she'd had her best month that year. She was only a small business. She was making barely 10 grand a month. But that month, I remember she hit 17K. And she saved the business. And thereafter, the business grew, and she's become a successful entrepreneur and investor. But she was literally days away from bankruptcy. And that simple strategy of going back to old customers didn't cost her a penny. There was no marketing cost. There was no acquisition cost. All she needed to do was just go. She didn't, and I had to coach her through the over reliance on emails and waiting for people to get back and all that nonsense. She didn't have the luxury of time. What she had to do was get in touch with people quickly and ask for that sale over and over again, or ask with referrals, and it worked. It worked. So sometimes, guys, are you overlooking repeat business potential? Are you being proactive on that, or on referrals? Is it time that you stepped up your game on that stuff? Because that doesn't require any outlay of cash. That won't affect your margins. It's just a case of doing it and having those conversations. So, one more thing. This is me, and every year we go and have a big get together at our annual conference. We have an annual conference somewhere in the UK. We spend 2 days together going to learn from some of the best educators in the world, like Stephen Bartlett and people like that. And this is our community. This is some of our clients, basically. And my last point today is: who's in your environment? Who's in your tribe? Who is influencing your thinking at the moment? Because if you're surrounded by the negativity that is all over the place on social media, if that is what dominates your environment, the risk is you're going to end up thinking just like all these other people who believe the economy is doomed and believe there's no future for their business. You can't know that's true until you actually put some things in place that give you a chance of improving it. It's like some of the things I've shared with you today. But who are you choosing to listen to at the moment? And can you control that? Because the great thing about our community is we all believe that we can be better. We can improve no matter what's going on out there and how challenging it is. So are you in the right community, whether that's online, physically? Who are you surrounding yourself with? If you've got peers who are full of doom and gloom, the risk is you collude with them and you just all end up thinking you can't charge more money or you can't improve your margins because it's just the prevalent mindset. And that's dangerous. That's dangerous. So choose your influencers carefully, guys. So what are you going to do from today? As always, that's my final comment to you all. And what I would say is there's only a limited amount I can share in a 45-minute webinar. So for those of you who want a bit of a deeper dive into your strategy and your plan to protect or grow your margins, then of course you can book a call with us and the team will be in touch about that to show you how you can do that. So please take action as ever. Take one thing away from today, decide what that is, take action. I look forward to helping you next time